Thank you, Victor Benga Afalabi.
Thank
And
you.
I would, I would also like to, thank you for the invite to share the little I know about wealth management, asset management. And indeed, when I was putting this together, I looked at the first page and the diagram and I thought, okay, there's something missing, and which has been highlighted over the last year, and that is health.
True.
And
True.
There's no time in my experience so far and the few years I've spent on earth that the importance of health has been highlighted as over the last 18 months. Everybody shut down in order to stay alive. So we realized at that point.
Remarkable.
We realized at that point that, the saying that health is wealth has never been more profound. So I look at it in terms of, if you're not healthy, you can't make sound wealth creation decisions. And that does not speak to just your physical health. It also speaks to your mental health. And in some advanced economies, even at the peak of the COVID crisis, they had more people on admission for mental health cases than they had for COVID cases. That goes on to show how important our mental health is. So in order for us to be good wealth managers or creators, we need to first ensure that we have very, very sound mental health. And, then when they gave me the topic of wealth and asset management in tough times, I laughed. And the reason I laughed was because, okay, if I'm addressing the audience in my country, it's difficult to pinpoint a time when Nigeria hasn't been tough for most people. But these are tougher times. There are two clearly distinct periods of tougher times I can identify in Nigeria since I've been alive. One, I was pretty young, and it was around 1984-85 when the military took over from the democratic dispensation. At that point, even though we were so young, but we could tell the differences happening because we saw milk disappear from the table. We saw, all the restaurants and franchises we were used to, they were shutting down bit by bit. The aisles became empty. All the Parmalats of this world, everybody was taking flight. Then now, it's another tough period. And the distinction between both periods is clear. In the 1984-85 era, when we were talking about very tough times, we were coming from a period of what I could call luxury or opulence. Because at that point, the structures we were left with still existed. So we still had credit facility, civil servants could still access loans. We just discovered oil not too long ago, so it was still interesting. Agriculture was still good. So we were definitely coming from a period of opulence. And exchange rate at that point, it was 89 kobo, as of 1985, end of 1985, it was 89 kobo to $1. The first time it crossed 1 naira to $1 was in 1986. So if you are going to compare that period to this period that we are currently in and what we are currently facing now, we will see that there's really no basis for comparison. And we talk about poverty now, and it's rife. And in the midst of poverty, it's difficult to generate wealth. So in the midst of poverty, when 90% of your population is living in abject poverty, even if you have very brilliant business ideas, that's your market. Those people are your market. Those 90% are your market. So without them having enough to survive on your business ideas as in an entity called Nigeria is going to be relatively tougher. Even though we have access to the global space, the global market now, usually your fortress is usually your home space. That's where you generate the idea, you innovate, you kickstart it, you test it in the market. Then the market supports you to go to the world. And I look at it, I look at Nigeria, and I say Nigeria is your first line of wealth creation. So anything and everything happening in Nigeria has a bearing on whether you're going to make wealth or create wealth or not. So indeed, we need to very well take care of that entity called Nigeria, because whether you like it or not, it's going to affect your ability to create it. So I've outlined this presentation just, I will speak most times extemporary from experience and from current events and what might not be on the presentation, but what I will try to cover will be just introducing us to maybe definitions for wealth. We'll look at what the gurus say about what investing is. Then we'll look at the economics of wealth creation and management. You need to pay attention to the economics of wealth creation and management, because once you understand what that is, that will form your basis for being able to create wealth and to effectively manage it and manage the risks that might come from those creations and opportunities. Then we look at the life cycle and financial planning. We look at the opportunity and risk identification. Then we look at how we will navigate tougher times. Then we conclude with questions and what we need to do and what we shouldn't do. So I first took my definitions from Warren Buffett, who suggests that investing is an act of seeking a value at least sufficient to justify the amount you pay for it. So when investing generally, when you're trying to put your resources, be it work, your work is an investment in your future. So be it work, be it the capital you commit to different other ventures, be it capital you give to wealth managers to help you create more wealth. One thing is clear in whatever you're trying to do. You are trying to derive more value from that little you've put in, so it can continue to grow, you can continue to create. Then John Bogle also defined investing as an act of faith. Is that willingness you have to actually put your resources to use and hand it over to some management in the expectation that, okay, when you need it, when it's time, they will give you a better return than you could ordinarily have mustered. So those are the two investing definitions that I think encapsulates what we're trying to discuss. For me, my training is in economics and finance, but without you understanding the basics of economics, economics is the bedrock for your wealth creation, because that's the entity you need to interact with. Your economy is the entity you need to interact with in order to derive value from that space. So you need to have a sound understanding of what your economy is like, how it operates, the current innovations going on, the policies, the trends that are coming on. And also, because the world is now a global space, you need to pay very good attention to the global environment and what's happening there. And believe me, Nigeria is interesting, but we also would follow, we will join whatever the world is going through, because the world is now so integrated. We can see the effect of technology on the way we live and do things now, and it's not about to slow. So many opportunities will keep arising in those spaces. And the easiest way to actually identify opportunity is to actually read. You need to be aware of what's happening around you. You need to be aware of the innovations, happening every day. So there's this diagram that I'm going to show you, which basically tells you about Nigeria, and the way you need to interact with Nigeria in order to be able to create wealth, and the different levers you need to understand and be able to manage. From those levers, you will see where the risk could come from. For me, I see all these as indicators. So you have activity in GDP, you have the income, you have your socioeconomic indicators, you have the global environment, you have your financial markets, you have your cost in terms of credits, inflation, exchange rate. By the time you understand how all those indicators interact, then believe me, you're jolly and truly well on your way to wealth creation. Looking at wealth management in the strictest sense of it, you will talk about wealth management to people that typically have about $1 million. Out in the West, most wealth managers will not talk to you if you don't have liquid cash, not assets, liquid cash of at least $50,000 or $500,000. So because the concept of wealth management in itself says you've created wealth. So all you need to do at this point is manage it. But what most people at our level need will be financial planning. Financial planning is what helps you ensure that you can create wealth in your lifetime and also be able to leave something behind in your estate when you're living. And the interesting thing is, for most people, it takes generations to create wealth. But in the current dispensation, we've seen many people that are first-generation billionaires. So when you look at wealth managers, you look at them in terms of them being your maybe specialized doctors, like a surgeon. They've gone to school, study general medicine. They've now gone ahead to specialize in managing those issues that affect the wealthy. So while you are trying to turn your one naira to 2 naira, they are trying to see how they can pay less tax, how they can design their transfer of wealth in a way that most of that wealth will remain within the family rather than going to the government in terms of taxes. So what they are trying to manage is very different from what somebody that is planning their finances will be managing. So if you're planning your finances, you'll be talking about looking at your income and how you will pay as little tax as possible. You'll be talking about your health insurance and life assurance. You'll be talking about, when you've gathered enough, okay, how do you deploy them? How do you redesign what you currently hold to ensure that you're not leaving anything behind or leaving anything on the table? So that's the essence of your financial planning. And from my experience, most of us Nigerians, we do not have a financial plan. So for wealth creation, you need to start from having a goal that you need to hit. So we'll talk on that, which is actually very, very key, because if you have no idea how much you need at your end of life when you stopped working, it's difficult to plan towards, saving and investing to ensure that you have that amount to actually live on when it gets to that time. From most of the things I've read and from experience, your children is not your retirement plan, or they are not your retirement plan. We should stop planning to have our kids as our retirement plan. It's a function of a failed system. It's because we can't live on our retirement benefits. We can't live on our pension. That's why we automatically have the kids as our retirement plan. It's funny, but if you really think about it, as parents, if you've worked for maybe 40 years and your kid is just coming up 20, you don't expect that kid to have enough resources to be able to sustain you. They are still struggling, trying to build and create. They are just going into that phase of their life. When they've started working, they will just need to start acquiring their own assets. Indeed, most in the West would have their parents give them a loan to buy their first houses. That's usually how it goes. Now, okay, your parents have acquired enough wealth, they've invested, they have some equity on their homes. So they have enough money to actually lend you to actually put down as deposit for your own first real estate. That's usually how it goes. And it's commonsensical that if I've worked for 40 years, I should have more money and assets than someone that is just coming up and has worked for a year or two. So again, that goes into financial planning, that you need to plan for that period of your life to ensure that you are able to take care of yourself when you get to that time. So the diagram I'm going to show you, which indeed just encapsulates everything Nigeria and the spaces we interact with. I'm trying to move this slide, but it's stuck because is what I will focus on, because once we understand what that is and how those things interact, the wealth creation, the opportunities, the risks, everything will emanate from that space. There's nothing else that is going to come out unexpected from that. If it's going to be global, you would understand what the global impact is and how that would affect the entity called Nigeria, and where you would create your wealth and what opportunities you would have. And if it's talking about the Nigerian space in itself, again, you will understand how everybody affects your own ability to create wealth and retain wealth. Indeed, most times in Nigeria, by doing absolutely nothing, if you had, let's take an hypothetical number of, say, 100,000 naira. If you have 100,000 naira today and you don't spend it, in 10 years, that 100,000 naira will barely be worth maybe 28,000. And that speaks to the depreciation that happens because of inflation alone. So because of inflation alone. So if you just hold your money and you say, okay, this is the chart I was talking about. If you just hold your money and say, oh no, I'm just going to keep it, I'm going to save it, or I'm going to even invest it in the Nigerian stock market, then okay, maybe I will make some money out of it. But in order for you to actually make money or create wealth, you need to be doing numbers higher than your inflation. If at any point your investment is returning lower than your inflation rate. Inflation is the rate of price change from year to year. So currently this year, we are averaging about 17%. So if you are investing this year, your investment needs to give you minimum 17% for you to be at the same point you were last year. So 17% minimum, because that's our inflation rate for this year on the average now. So for you to be at the same place you were last year, not to get poorer, you need at least 17%. So your 100,000 that you put in investment in January, on 1st January next year, it should at least be 117,000. What that does is it allows you to just break even that, okay, I'm not well off, but I'm not poorer than where I was last year or the beginning of this year. And again, that also speaks to your salaries. That if you were earning 100,000 last year, or at the beginning of this year, for you not to be poorer next year, at the beginning of next year, your salary should have increased by at least 17,000 naira if you started with 100,000. So I did a simple calculation, I did a simple maths, and I just took 100,000 in 2010, 2011, and I just compounded by inflation. And what that showed me was over those 10 years, your 100,000 based on inflation alone, nothing else, absolutely nothing else, just your inflation, your time value of money, that for you, the value of your money not to be eroded. In 2010, if you had 100,000, you need about 345,000 naira now to equate it to the 100,000 you had in 2010. So that speaks to your ability to actually break even. That's not even wealth creation. At that point, you've not created anything. You've just been able to break even. That, okay, I'm still stuck in the same place I was 10 years ago. I've made 345, I've made 245,000 extra on my 100,000 over the last 10, 11 years. But you will think you've made some money. No, you are still stuck. You are still in exactly the same point you were 10 years ago, which is a dynamic most investors, or especially the retail investors, do not take into consideration when you're picking your investment vehicles. That what you should be interested in is not the return. It is the real return. And that real return is when you back out inflation from whatever you've earned, from whatever you've made. So if your stock market did 10% last year, if your investment did 10% last year, and inflation was 12%, you've lost 2%. So you've not made money. Your investment is worse off than it was when you started. So that's one key thing. Anything at all you're putting money in, you need to be looking at it in terms of the real returns. And your money also has opportunity cost, because you could have spent it, you could have enjoyed it, you could have put it into different things for it to yield returns for you. So yeah, you've not even put that into consideration. You've not also taken cognizance of the fact that you've taken some risk. So you should be paid for the risk you took. So you not being able to even break even, over a year, you might say 2% is not a lot, but over your working year of 35 years, 40 years, then compounding those 2% here and there, 7% here and there, becomes very, very significant in the erosion of your wealth, in the erosion of the value of any assets or money or investment you have. So you might be wondering that, okay, I've been putting money away, but the money about this time is not enough to even pay expenses. And again, in terms of your financial planning, you'll also be looking at it not just in terms of what you need. You'll be looking at it again in terms of what you need to spend money on. If you're spending money on, if you expect dollar spend, and you're investing in Naira, then it's foolishness, because there will be a translation risk at some point that, okay, I need to then convert my Naira to dollars. And if at the point you're converting your Naira to dollars, that money is barely enough to cover anything you want, then you've really not invested. You've just wasted the capital you had. So looking at this slide, when you talk about the economics of wealth creation, I say Nigeria as an entity is your first line of wealth creator and wealth management. And the reason is simple. If you look at the rich people and ultra wealthy people in the world, they usually create wealth on the back of their economy. So if you go and look at the new billionaires and the billionaires for 2020, 2021, you will notice that the two largest economies in the world have actually produced 66% of the top 50 billionaires right now. So between China and US, out of 50, the top 50 billionaires, China and US account for 33. That's 66%. Indeed, out of the first top 10, US alone accounts for 80% of the top 10 billionaires in the world right now. So 8 out of 10. The other two that managed to creep into the 10 was a French family and a Mexican. The French family is been around, is 80 plus. So it's hard time to build this wealth. It is a first generation billionaire. But what that speaks to is the fact that you are in Nigeria suggests that your ability to create wealth, the odds against you creating wealth has actually spiraled for the mere fact that you were born in Nigeria, by the mere fact that you do business in Nigeria, by the mere fact that your investments are also in Nigeria, by the mere fact that your economic base is Nigeria, the odds have increased against you. Because let's take it, the Nigerian economy is the pie that we all need to share, that we all need to make money out of, that we all need to make sense of. The per capita income in Nigeria is about $2,097 for everybody, right? But that's the law of averages. That in itself does not tell us the whole story, because if you're looking at the minimum wage, and you say minimum wage is 30,000 naira, that 30,000 naira times 12 is way less than, 30,000 is less than $100. So let's even take it at $100, that's $1,200. And you have more people in that space than people earning much higher. So again, you have the concentration of wealth at the top. So people that have gone to school earlier when Nigeria was gotten into the work zone earlier, they've been able to acquire some skills that companies will now pay a premium for, relative to those that are just coming up. And if you look at the numbers don't lie. Right now, we have about 33% unemployment rate, and we are churning out graduates on an annual basis without the economy to actually absorb them. So invariably, we are graduating students into poverty. So if people coming out of school right now are still trying to get jobs, 33% is the unemployment rate. Another 22% is underemployment, meaning they work less than 20 hours a week. So between both of them, you can see what the numbers are. Again, that speaks to your background. That speaks to your economy. That's your foundation for wealth creation. So when we look at the Nigeria as an entity and the way we interact with it, we need to understand that it holds a lot in how we turn out. For investors, for startups, entrepreneurs, salary earners, as long as you are playing in that space and entity called Nigeria, as long as Nigeria is the base you expect to be the catalyst to push you to the world, then the odds are like 30 times against you. Just think about it this way, that in a country like the US, their per capita income is about $63,000 for every individual. Us, for Nigeria, our per capita is about $2,097. Then what do you think in terms of the leg up that each individual from both countries has got by just being citizens of a specific country? They've already gotten a leg up that we have. So, and if we are unfortunate that our parents also didn't create an estate, they weren't able to build wealth in their own lifetime, that means we basically will be starting from scratch as well. So they would have given us the education we need to go into the world and survive, but they wouldn't have given us the needed leg up to build a generational wealth. And that's a chain that we all need to break, so that when you struggle through a phase, by the time your kids are coming up, you will ensure that they don't go through the same things you went through. That's the way to build wealth. So your parents didn't leave any house for you, any asset for you to live on. Then when you are living, ensure that you leave maybe one or two assets, maybe one asset for each kid, so that they are not starting with rent and they struggle to pay rent. Their own struggle at that point will be to ensure that whatever money they earn can be put to good use, so that they can leave something better for their own offspring when they are coming. And indeed, with the COVID pandemic, you can see how integrated the world has become. If somebody had told you in 2019 that the world is going to shut down because of a virus, we would all think anybody saying it, you would all think, oh no, that's insanity. I know it's not about to happen. But that's the reality we found ourselves, right? And even in that period when we said the world was crazy, poverty was rife, the world has still made new billionaires. And most of the new billionaires, they didn't start the businesses during the COVID period. The businesses were already existing, and COVID just accelerated the evolution of those businesses, like Zoom that we are using. COVID just accelerated the importance of this. So if you as an investor are the conversant of what the global trends are, you will be invested in a Zoom, for example. You will be invested in assets that do maybe online education, because gradually you'll be invested in maybe AI, artificial intelligence companies, technology generally, in spaces of electric vehicles. You just, what the trends show you is where the future is likely to go. So without you paying attention to what the trends are telling you, you will miss out on most of the expansions that happen when they actually happen. So these things don't happen overnight, but they are actually indicators that will tell you and guide you on where to put your money, on industries that are going down, on industries that are coming up. So looking at the Nigerian entity in itself, we obviously depend on global conditions for a number of reasons. Our main earner, which is oil, the price is not determined by activities in Nigeria. So you're looking at the geopolitical events to determine what the oil prices are. We can't affect oil prices. So by the virtue of that alone, we are susceptible to whatever happens in the global environment. And that will include capital flows. When the world is not doing well, capital flows outside of their own countries will definitely slow. And this is actually very important to Nigeria because of capital scarcity. And also diaspora transfers. After oil in Nigeria, it's diaspora transfers. We might not understand it, but the truth is, on the average, Nigerians living outside Nigeria, through the channels we can measure, actually send home about $23 billion per annum. This slowed last year, but the trend has continued, was always rising, because the more Nigerians you have outside Nigeria, obviously, the more money they send home. So that alone is a very, very significant portion of foreign reserves, monies that are coming. And so that's why you need to pay attention to global conditions, because if global conditions aren't good, like last year, for example, it dropped from 23 billion the previous year to about $16.8 billion. So you can already see the impact of global events on the Nigerian space. And you can readily see the impact of oil prices and how that has affected our exchange rate. We are not making enough from any other space than the diaspora transfers, the capital flows, and all. Those are the main areas we get our FX from. And right now we are really not an exporting economy. We are not a producing economy. So if you understand that okay, diaspora transfers slow, activity globally slows, exchange rate is going to take flight. If you look at the only respite we might have in terms of capital flows is if the foreign policies are lax, if they are loose foreign policies such that if they're expansionary, then you can expect some of this to trickle to the emerging markets. But if those policies aren't expansionary, again, if you will see capital flight from the developing markets back to this, what they call the safe havens. Then in Nigeria, if you look at activity, that's where you make money from, right? Whatever we do, the work, the industries, you look at our activity over the last 5 years, Nigeria grew by just 1.53% if you sum the growth over the last 5 years. We grew by just 1.53 because in those 5 years, we've had 2 contractions. So in those 5 years, we grew by only 1.53%. Then if you add that to the average population growth of about 2.6% per annum, that's on the average 5 million plus per annum being born every year on a 206 million population, and an economy that grew by 1.53% in 5 years, not every year. That's not an average, that's the sum total of the growth. So 1.53, and if we even take, say, population is growing by 2.5, then we've increased the population by 12.5%. So that's at least 24 million people born into poverty, because we have a poverty incidence rate of about 90%. So these new bonds, they are not coming to buy your stuff. They are not coming to buy our market yet, because they won't have the resources. They will still need to depend on their parents. And if their parents are poor, that's an implication for your business. And obviously, if the activity is not strong, it speaks to your income. Your ability to ask for a pay raise, it's not going to be there. So that in and of itself, affects how you can make money, how you can expand whatever you have. Then when we look at the cost aspect of it, you look at inflation, you look at interest rate, you look at exchange rate. Again, those are risks in themselves that you need to understand for you to be able to manage your wealth and for you to be able to create wealth. If your inflation is averaging 17% now, and is averaged about 11.93% over the last 5 years, 10 years, then that suggests that anything you put money into on an annual basis needs to return at least about 12% for you need to be poorer than where you were when you started investing. And our inflation numbers are simple to understand. We don't produce so much, so we have a lot of imported inflation. So whatever happens in the global space, we buy the goods into Nigeria. Exchange rate has taken flight. So that will show up in your inflation numbers, right? So if that shows up in your inflation numbers, now we have security challenges that has limited people's access to their farms, people's access to the market. Again, those are bottlenecks that would affect whatever you have, whatever your funds are, and obviously they will show up in your inflation numbers. Then you look at infrastructure. Infrastructure is another bottleneck that will show up in your inflation numbers, because if one head of a train could easily move about 200 trucks, and we are still busy moving every item by road, one truck, so that obviously speaks to the friction in the logistics and the value chain. So obviously, again, that shows up in your inflation numbers. So Nigeria is not a single digits inflation environment, no matter how we dice and cut it, no matter what policies the central bank puts in place. We are not a single digits inflation economy. And the reasons are simple. The frictions are too many to be able to do a single digit inflation. Then obviously your exchange rates. We are not a producing economy, and we keep shipping our jobs out of Nigeria. Indeed, I've heard some schools of argument and thoughts that have said when Twitter moved or when they situated their African headquarters in Ghana, there is not a big deal. Why are we making a big deal out of it? When Hyundai, Toyota, and the likes set up assembly plants in Ghana as well, they said, no, it's not. But why do we make noise? That when everybody else is coming to Nigeria, we don't make noise. That whenever they go outside Nigeria is the only time we make noise. Nigeria is an economy with 33% unemployment. We are the consuming economy. All the things being produced in Ghana, Nigeria is the target market. So if they are not producing in Nigeria, you are shipping your jobs outside. Your unemployment numbers cannot come down. And that affects your ability to make wealth. Because if you look at the numbers alone, your 0 to 14 years, they are 42% of your economy. Your 0 to 14, 40% of your economy, they are not working. You just need to feed them, and you will train them to, they go through school. So it's not, we need more jobs. We don't need fewer jobs. So we can't afford any company that targets Nigeria as its consumer market to ship our production, to ship whatever they are shipping to a different country. Indeed, if you look at the capital flows into sub-Saharan Africa, for Nigeria, it dropped significantly by about 27%. But for the other sub-Saharan African countries, it actually increased by a measly 2.3%, but it's still commendable. But Nigeria's own dropped. And like 20, 30 years ago, as a share of the sub-Saharan capital flow, Nigeria accounted for close to 70%. Now we are barely doing 40%. That speaks to the importance of those other African countries coming up, because they've put their houses in order. They've done all their competitiveness and ease of doing business, they've improved on those. So that speaks to their citizens' ability to be able to create wealth, to be able to grow their companies. And indeed, if you think about it, it was in the news more recently, maybe last month or 2 months ago, that Dangote is opening a New York family office so that he's going to be able to preserve his wealth. That is very, very significant, because you understand. And if you've been following the billionaires index, you will see that these billionaires from Nigeria, the volatility of their position is very, very high. And the reason is simple. It's because of the exchange rate. So if you make most of your money in Naira, your currency takes flight from 160 to 320. That's half. You've destroyed half of the value. So between inflation and exchange rate alone, that's your value erosion for you. For me, I said the poverty, at the heart of the poverty in Nigeria is value erosion. So you have your Naira that, and 1 Naira today is definitely not close to a Naira in a month. It's already depreciated by about 1%, 1.7%. So no matter how much you struggle, no matter how much you try, no matter how brilliant your ideas are, Your ideas are still encapsulated in that entity called Nigeria. So you need to be able to understand the risk you face by being that Nigerian entity and then manage those risks to be able to, manage the tougher times that are coming and that will come. So based on this Nigerian entity, once you understand how activity cost policy, we look at the Nigerian fiscal policy. Over the last 5 years, you look at the debt, how the debt for Nigeria has ballooned. Our revenue has only increased from about 3.24% to about 3.86. In that same period, our deficit has gone from about 1.52 trillion to about 4.17 trillion. Also, 5 years ago, our debt in dollars was 63 billion. As of today, it's about $87 billion. And in Naira terms, it was 12 trillion in 2015. Now it's 33 trillion. And our revenue, like I said, as of 2019 was 3.86. So if you even do the numbers and say, okay, by now, it will be max 4.16 based on the trajectory, because our government revenue grew by just 19.3% over those 5 years. Whereas our deficit has increased by about 174%. So looking at the numbers, and the deficit will continue to grow because our production hasn't increased. So the government's ability to pull resources and pull funds is not going to increase, and it's not about to increase anytime soon. And the numbers are there and they are getting worse. So you need to be ready, you need to prepare. The numbers you'll be looking at when you're looking at your FX, looking at the fiscal policies, looking at the debt numbers, looking at our debt to revenue ratio. Indeed, some of the economists say debt to GDP. Debt to GDP as a measurement in Nigeria is not relevant because the Nigerian government and entity has not been able to draw money from that GDP. So that GDP is useless to the government. What you are likely to be looking at, what is good indicator to look at, that will warn you that there's a crisis coming from that entity called Nigeria, is to be able to look at your debt to revenue ratio. If you look at your debt to revenue ratio, your debt service, which means your ability to service your debt, is about 63. So right now, for every 1 naira we earn, we spend 63 kobo servicing debt. In a bit, we are not going to be able to service that debt anymore. So those are parts of the issues that will arise. So if we like, we can keep looking at debt to GDP and say, oh no, we are not borrowing at a fast rate enough. So that's the background of Nigeria and your ability to create wealth, right? So now the question is, what can we do when we have all these challenges, when we have all these issues? The first thing first is understand what the risks are. If you understand what the risks are, then you are well on your way to at least protecting whatever you make. So a simple analogy, let's just look at it this way, that when I had my 100,000 in 2010, I decided to invest in the stock markets. Between 2010 and now, the stock market returned 64%. And my inflation took away 245,000. So I'm actually in deficit in terms of the value I've created. But if you are taking that same 100,000 naira, converted it to dollars and invested in maybe just an index, maybe Dow Jones index, for example. Dow Jones index over that same period has returned about 193%. So if you are just done just a round trip in that, okay, take this naira, convert to dollars. At the point you are converting, you probably have been getting $666 in 2010. Then put that money in Dow Jones. Get your 193% return now. Then you convert it back to naira. That will give you about $1,200, and your revenue at that point, or your profit at that point, is well around 390, depending on the exchange rate you use, is well around 390 naira, 1,000 naira. So you've been able to manage two things. You've been able to manage the exchange rate risk, and you've also been able to manage the inflation risk. Then if you look at what your for the average middle income earner in Nigeria or middle class people in Nigeria, which is gradually, depleting every day. If you look at that, most of us want to send our kids abroad to school. Our investments cannot afford to be in Naira. At least a significant portion of that would cover, because you don't want to be translating. At that point, your kids are going to school. You've invested for 20 years. Then you realize at the point you are investing for 20 years that all the money you've invested cannot even pay for the first year of your kid that is about to go to school. But if you had understood the risk, so when you're talking to your wealth managers, when you're talking to your asset managers, you need, and that's the essence of financial planning. So financial planning is like taking a trip. So you're taking a road trip. What are the stops along the way? You're going to buy fuel, you will stop. Your kid is going to go to school, is a stop on the way. But your ultimate goal is to be able to retire comfortably, right? But you have expenses. You need to buy a house along the line. You need to pay school fees. You need expenses. You need to train your kids. Those are stops along the way. So your design for the financial plan is going to take into account what those are. Again, everybody is different in terms of their risk profile. So again, some people are very aggressive, some people are conservative. They can't afford to see their $1 go to 99 cents. Some people are just not, they are that risk averse. So for them, is what it is. You will need to be able to, manage those. And it's in the financial planning space that you'll be able to understand all those, right? So you look at it and you say, okay, if this is Nigeria and these are the risks I'm trying to manage, and the two risks I see most times for the retail traders and investors, the everyday investors in Nigeria, will be the inflation and exchange rate. Those are the two main risks we need to battle, because they are the two main things, aside your being able to actually make money, which will derive from your activities, right? When you make that money, what do you put the monies in? So, and that will go into your portfolio design that, okay, what's my goal? What's my end life goal? And I say to people that whereas the West might have 3 phases in life, in Nigeria, we have only 2 phases. And the reason is simple. Our life expectancy is 56. So you are expected to train 0 to 20 education. Then from 21 to 56, we die. So you are expected to die working. It's not rocket science. It's not a prophecy of doom. That is our current life expectancy. So when you are born today, you're expected to live for 56 years. We might say it's not our portion, but it's the reality. So you need to plan with that reality in mind that hopefully you will extend beyond 56. But if you as the main breadwinner dies at 56, what happens to everybody you're leaving behind? And that's why, even though in Nigeria, we really don't like to hear it, but life assurance is one of the very, very fundamental investment ways by which you ensure that you leave something behind for your kids and your family. It's okay to have faith. It's okay to pay your tithe. The people that brought the religion to us, they also have faith and they pay their tithes, but they also have life assurance. Insurance is funny in the sense that the only thing you need to guarantee is you want to stay alive, but they can't guarantee you will stay alive. That's why it's not life insurance, it's life assurance. That they will be able to continue your path when you've passed on. So whatever you've invested, whatever you've put in, whatever your premium is, whatever your life assurance is, they will be able to give it to your kids and family when you go. It's very, very important. I know we don't like insurance because we pay tithe, but it is very, very important. Please pay attention to that. Then when determining what vehicles to invest in, some people say don't speculate. It's okay to speculate, but don't speculate money you can't afford to lose. And in speculation, like new industries come up every time. Even when you are speculating, you speculate intelligently. Invest 95, 99% of your resources in what is guaranteed that, okay, I've done the analysis, everything I've done this is what is going to be, okay, I'm going to guarantee this return, but I want to stake 1% in new industries that are coming up. And when you are getting into the new industries that are coming up, don't get in at the deepest end. I know a lot of people have been talking about cryptocurrency, and the risk and volatility involved. Cryptocurrency, fine. But if you, as an investor, not a gambler, if you're getting into cryptocurrency, understand what cryptocurrency does, understand what digital currencies do. Understand the technology behind it. So rather than you just buying coins up and down, look for the business model of the cryptocurrency. Okay, what is crypto? It's a blockchain. It allows you to do distributed ledger. Okay, are there companies that are making use of this blockchain to provide services? You are able to derive the growth that will come from that industry with lower risk than if you had put your money in something that is volatile, that you don't understand the intrinsic value. So in doing that, you've taken advantage of a new trend, but not in a stupid way that you couldn't guarantee the value. If you had gone in to invest in a company that does a blockchain, for example, or the ones that were providing the servers for them to actually produce and mint the coins, you would be better off than if you had gone into something that could turn to zero tomorrow and can come back to 1,000 next tomorrow. So in understanding the trends and fads that are coming up, do not shy away from them. But you need to have a strategy to be able to manage those fads and new trends. And the easiest way to actually manage this and understand these new fads, anything that is new, look at the industry itself, look at their growth numbers. That's how to get into trends. So the fastest growing ones are the new trends because their base is low. So once the base is low, the growth is going to be higher. So if the growth is higher, you will understand that, okay, no, these are the new trends. So you start putting your leg a bit, you divert some of your investment into the new ones. When technology came in the bubble years, we saw how it grew quickly and how it went down. But technology is here to stay. It's going to, is changing the way we do things, and it's going to continue to be relevant.
Wow.
Then you need to also look at those industries that are the largest industries. That's the base of your investment. Those are your shorties that if anything goes wrong, in utility, people will use electricity. Electricity is not going anywhere. People will drink water. People will use water. So you have your defensive mechanisms. Then you have your investments that are in the middle range. They're neither here nor there, but they are still giving you decent returns. But without you first understanding your financial plan is the most important. You need to have that financial plan, determine what your end goal is, then everything else you do. So in the earlier stages, when you're in your 20s, you are able to first not experiment, but at that point, you are able to take more risk. So your portfolio will be more of equity, less of bond, some real estate, less cash. The older you get, by the time you get into your 50s, 60s, you don't want to do more than 15% of equity because you won't be able, the business cycle is usually 10 years. You don't want a situation where you have a market crash when you are in the tail end of your life that you won't be able to wait the 10 years for the market to come back up. So another investment, what I call it tactical, is you need to, when you are aware of the trends, then all you need to do at that point is have a strategic, specific amount of money you invest every month. That's the power of compounding. When you invest every month, you invest in all times, when the market is high, when the market is low. So at the end of the day, you average out. It's called averaging. So at the end of the day, you average out and it ensures that you still have a decent entry. And that is compounding on a monthly basis, on an annual basis. If I had been investing $100 every month that I could afford 10, 20 years ago, you'll be well off by now. So, but again, the investment vehicles you invest in, they're as important as the decisions you make. So, don't gamble. There's no gamble in wealth creation. There's no gambling in wealth creation. Wealth management, they are specific. Thanks. I could go on and on.
Thank you so much. Remember that he's a consultant and expert in this. if we let Aki continue, we'll be stuck here till 8 p.m., but I was enjoying it. You need to have seen my notes, okay? So it's not just because I'm hosting, it's because there's also a lot I'm learning and a lot I'm writing, and I'm sure every other person on this session on Facebook, on LinkedIn. I saw a few questions coming from Facebook, and I'll throw a few of that to you. On YouTube, we have a couple of people there apart from the people in here. And somebody had asked the questions. I mean, like, thanks everyone. I know we've gone beyond the 6 p.m., but it was worth it today. I'm going back a bit more humble and sober, looking at the fundamentals of Nigeria and how, you know, you can run faster than the place where your economy is built, okay? But there was a question that came up to say, look, our unemployment, rather our inflation rate is 17, 18%. Do vehicles really exist that return investment beyond this inflation rate? That's one of the questions from Facebook. Do vehicles exist that can return a rate beyond this 18% of inflation? Or are we all doomed because we're in this country?
Okay, let me take that. Yes, vehicles exist, and the vehicles that will exist will be a mix and match. Your inflation is 17%, right? So if you're investing in Naira, right now the risk-free rate is about 11%, so don't bother. If you're putting money in bond, you're losing money, right? So what you'll be looking for is an FX exposure.
Yeah.
So the FX exposure will help you manage two things. It's going to manage your Naira, preserving your Naira. Then it's going to add to your return. Like the analogy I made about the investing 100,000 in 2010. Easily, by moving that Naira into dollar at that investment point, investing it in just an index, you are not managing it. You just put the money in an index. It's passive. It yields its own return, aside the dividends. That automatically, what that did was it took your money from 100,000 in 2010 to about 490,000 in 2020, right? Inflation at that point would have necessitated that you had minimum of 345,000. So you can already see that you have 490,000. So you've already beat that inflation trap. So that value erosion that you would have suffered, you've already beat it by knowing the right vehicle to put your money into. Indeed, the federal government too, they have some vehicles where you can invest in. All the bonds. Their euro bonds are in dollars, but if you can get in at a rate that it's good, maybe 6-8%, then you are sure at that point that between a combination of your return and the exchange rate that is going to take flight, this is not a prediction of doom. It's just what it is. You don't invest based on hope. You invest on what you've seen in the previous times, right? So if you look at the trajectory of Nigerian exchange rate relative to the dollar, it's not going to get better tomorrow. We are still going to get worse, right? We'll still get to 1,000 at some point. It's only a matter of time. So we've started from sub 1 naira to $1, right? Indeed, we started about 50 cents to $1. Now we are on the black market, we're above 500. It's still going to continue that way because the economies that are growing, it's a function of economy and demand and supply. US is going to continue to be larger than Nigeria. It's going to continue to grow faster than Nigeria. So that just means their currency will be stronger than Nigeria until the time we can get our own engineer production and just get our house in order to be able to produce for our people to actually consume. It's only at that point when you start becoming the producer of what you consume that your currency will then have value. Aside that, that's about it.
So it's a mix and match. And I think for many of the listeners, especially people who run businesses, who are startups, who use innovation, I think it's not all gloom and doom. Like you said, it's about the strategy. It's about, I sit in a few groups where I see people developing something for the FX market. So you are developing something where your customers can be diasporans, your customers can be all over the world. And that's why we've seen a few of the valuations we've seen with some of our payment platforms, that are out there. It's for you to make sure. I mean, he said some things that are table shaking, if I would say that. This the Nigerian economy that determines your first base of wealth. So the fact that you are doomed, sentenced to be in this place means there's a limitation, like, Benga was being nice, he could be a bit blunt, but today he's a bit mild with us. But that's the reality. You're already running a losing battle with a lot of odds stacked against us. But from an entrepreneurial point of view, and from what he said, when he says look at FX, it's also as entrepreneurs. It's now a global village. Can we begin to build products that have global appeal? I mean, he has co-founded two products. Like I said, Declutter is one in which he has co-founded, and I still have on my phone, and you can use to. And these are global platforms that can happen from anywhere in the world. Okay, so it also gives you an opportunity to get some of those effects, because as entrepreneurs, we need to beat these odds that are stacked against us. Before you go into financial planning, which he has said is the fundamental. I mean, let's not discuss wealth. That looks like a long thing based on what Aki has shared with us. That wealth thing looks like a long thing. But talking about even the financial planning, it's for us to even be able to generate enough revenue to even be able to have something to plan. And I think that is quite instrumental. I've not seen more questions dropped on the platform, but I think he said a lot of mix and match. Somebody also had asked earlier on, and this will be the last question. I know we've stretched our time beyond this, but what I keep calling Benga because we're Bengas, but if I say Benga and I say Aki is the same person, but I'm used to calling Benga. Remember, we have a 34-year history. We were classmates way back. But today he's Ogadi, very, very tough, and then we need to look up. But I'm excited for what he's doing. So somebody had asked a question and says he wants to invest in platforms. He's done something on agri platform. I know you've done massive consulting in this part of the world. I know you do a lot of advisory in this part of the world. You sit on funds who are investing. These funds are listed in stock exchange, which means you basically also invest in platforms in the country, in those funds. And of course, being chairman of the investment committee, you are the one that needs to sign up these final investment decisions for some of these hedge funds. Question is, in this environment, beyond the match and mix, match and fix, you said match and mix here, which you said we should do for the FX. Are there business vehicles that you have seen or sectors you are considering? Somebody talks to you, has done agree that you think entrepreneurs, innovators can begin to look at that might give them returns that is likely going to beat all the odds that are stacked against them?
Oh, well, it's simple. The way it usually goes everywhere in the world is, if you're a venture capitalist, you're a venture capitalist. You would identify, like, for example, in Nigeria, for example, agriculture should be big. We should be feeding sub-Saharan Africa, right? So if there are platforms for agriculture that make investing in, I know a lot of them came up and I know a lot of them have gone down as well. Those platforms would be very, very good to invest in. But beyond that, what I've seen countries like China do, which is what I hope Nigeria can do, is we need to start creating IT products. And that will go to lobbying, that will go to pressure groups, that we need to start creating IT products that we consume. We have the numbers. Currently, we are producing businesses for the Twitters of this world, Instagram, Facebook. Most times you won't find me on social media. And the reason is simple. If I'm not doing business on it, I'm not going there. If I need to meet people, I will go. But it's time consuming. And they've created something for us to consume. We will consume it. So I will say, look for those vehicles like IT investment. But you need to be looking at the problem they are solving. First, the first thing first is, what problem are they solving, right? Is the problem niche, meaning is limited to a specific number of people? The success of a niche product is more difficult than the one that everybody else can adopt, right? It's no rocket science if, for example, someone comes up with an innovation, like a solar innovation that is cheap and affordable for everybody. So if you see a vehicle like that people are putting maybe electricity related or power generation related ventures together and saying, oh, okay, this is good. Then because you look at the problems we face, right? We generate power, we can't transmit because our transmission is bad. We need investment of about $1 billion every year to be able to renew our transmission mechanism. So by the time you see someone or businesses putting that together and trying and having the government backing to transform the transmission sector, you will know, oh no, this is a good investment. When MTN came into Nigeria, their best analysis told them they were probably going to break even in 10 years. Under 3 years, they had broken even and started making profit. So you look at the trends of the world, right? Before you put money in ventures, look at the world. Look at how those trends have gone. Look at where they are. When you're able to identify the evolution path of the platform you're about to put money in, then you're truly on your way to being able to invest in platforms, in vehicles that will return something that's definitely going to be higher than inflation or exchange rate that you're trying to battle.
Thank you.
You need to be looking for something that has a high potential and growth.
Okay. Thank you so much, Akin. I really appreciate. And to all our listeners, it's 15 minutes that we've gone beyond time, but we needed to hear this. It jolts us back into reality. I was looking at the debt. Public debt today is 35.5 trillion naira. Okay, so when he went showing us all those economic indices, there was no way I could have reined him in. I needed to hear this much more than every other person that is even around this, because you are asking yourself, how do you beat this? So thank you so much, and thank you for all the participants who have joined us across all our platforms for this edition, the 55th edition of Techbiz series. And the essence again is to bring to us relevant information that allows us commercialize our businesses, that allows us pivot properly, that equips us to be able to come up with innovations and organizations that are changing the narrative. That again is what we're striving to do, and what we have tried to do today by having our facilitator who comes with a lot of wealth of knowledge. You might not be able to get everything today, but the recording will be up tomorrow by noon. All you have to do again is go to our website, ecoicenter.com/webinar. My team will be throwing that link up now. You will find it there. All the 55 episodes are there, but this I will definitely go back. I need to listen to all that thing around FX, inflation, and all that, how it stacks up, and how one is able to beat this. Because hey, come to think of it, it's like we're running a losing race. How can I restructure? The other thing is questions that you have. Just join the Telegram page, and my colleagues also will be dropping that in the chat room. From the Telegram page, you can always drop your questions. We will send it to our facilitators. Some of the facilitators are also on the Telegram page, and they can respond to you. The essence is to create the handholding. So be a part of that and be a part of the community as to strive in the Eco Innovation Center using the Techbiz series to bring to us relevant information that can equip stakeholder players in the technology ecosystem. Again, this is coming from Eco Innovation Center. It's located in 50 Awolowo Road, Ikoyi, Lagos. And of course, our focus is to move organizations that we support and organizations that we interact with from concept to commercialization. We think it's in commercialization that we can increase the pie and solve the issues that befalling this country currently. I still remain your host, Victor Gbenga Folabi, the founder of Eco Innovation Center. And I want to say big thank you, very big thank you to our facilitator for today, a friend and a brother of mine, and to all of you that were a part of this across all the platforms, from YouTube to the Zoom and to LinkedIn and of course Facebook. Thank you, everyone. Please keep a date with us again next week. Next week, we'll be having another facilitator, same time next week. We will be talking about innovation and productivity, and we'll be having Remy Dairo come to talk to us about using technology and innovation to drive productivity. If you have listened to what Aki had said, productivity is what we need to do to be able to reverse of not getting to 1,000. And we think that's what we should be talking about next week. So do keep a date with us as you join me again on another Techbiz webinar by 5 p.m. next week, Thursday. Thank you very much, everyone, and do have a restful evening and a great weekend ahead. Thanks, everybody, and thanks to our facilitator. Have a great evening.